Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group. I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in markets last week?
Yeah, thank you, Jeremy, and thanks for our listeners jumping on the call. Shortened holiday week this week, but last week we saw the S&P 500 and the Nasdaq in slightly lower for the week, with the Russell 2000 rising about 2%, mid-caps gaining about 1.3%. We continue to see that rotation from the unloved or underperforming areas, those large cap tech areas kind of giving it up a little bit to the small, the mid-cap, international. We saw consumer staples. They led about 3.5%, and financials gave up about 2%. If we look at corporate earnings, the started corporate earnings, we always see the big banks coming out. So they came out with Morgan Chase, Citigroup, Goldman Sachs, Morgan Stanley, all reporting strong earnings, some having a little mixed picture on the revenue front. If we look at commodities, we saw gold hitting some record highs at about $46.50, and silver surged 17% to $93.70 per ounce before pulling back just a little bit. And crude oil dropped about 4% on Thursday as fears of U.S. strike, as a fear for U.S. strike on Iran eased a bit. Now, looking at U.S. economic data and some policy that came out, we saw the Treasury yields rise as economic data kept Fed rate cut expectations unchanged, with the CPI increasing about 0.3% month over month. That was 2.7% year over year, and that was in line with forecast. Retail sales for November, that rose about 0.6%, supported by strong Q4 25 growth expectations. In the DOJ, threats of criminal indictment against Fed Chairman Powell raised some concerns about the Fed's independence, spooking the market a little bit. And we saw existing home sales jumping about 5% in December, but new home prices continue to fall due to some weak demand and some high inventory. On the international front, we saw Japanese yen fell to its multi-year lows before a slight rebound. China's 2025 trade surplus surged about 1.2 trillion, driven by exports to South America, Southeast Asia, Africa, and Europe. And the UK's GDP grew about 0.3% in November. Now, the week ahead. Long story short, it's going to really probably be driven by earnings and geopolitical events. But right now, it's earnings. And we're going to be looking at some pretty big ones rolling out outside of the financials that usually start that I mentioned earlier. So we'll see Netflix, Intel, Procter & Gamble, Johnson & Johnson, Freeport-McMoRan, D.R. Horton, just to name a few. But it's kind of really starting to ramp up here in earnings. And I think that's really going to set the tone for the market. You look at U.S. economic data. So Thursday, we'll see a delayed PCE price index data for October and November, and then the final read on Q3 GDP. Friday, we'll see the S&P Global Flash PMI for the U.S. and other developed economies. Internationally, we see the Bank of Japan's expected to keep rates unchanged at week end, and no rate hikes are expected until the summer. Ongoing yen weakness may force potential government intervention. Possibly. We'll just have to wait and see. And then other global events, we have the World Economic Forum over in Davos. Discussions will be centered around global economic challenges. I'm sure our administration, the leader, the president, if you might, who's going to be speaking in Davos, will have a few interesting probably words to add to that meeting. But key international economic releases will be the China GDP, industrial production, retail sales, Canada and UK's inflation reports. Jeremy?
Thanks, Graham. Well, I had a question for you. So now that we're a couple weeks in, I guess 2 full weeks into the year, how do you kind of see the market shaping up as of right now?
Well, it's kind of shaking up like what we thought. We thought that the market was broadening out really almost towards summer, October of last year, really broadening out. Small caps, mid caps, international leading U.S. core, AI tech trade kind of giving up a bit for those other areas of the S&P, those other 9 odd sectors that maybe underperformed a bit, really starting to outperform. So we're really seeing that come to light right now. I also think something that we pointed out in our end of the year call, a New Year thoughts, is that we're seeing the equal weighted S&P. So you know the S&P is not an equal weighted index. Its core is basically a cap weighted, but the equal weighted S&P index up about 4%, where we're seeing the S&P itself up, what, 1 and change? So nowhere near that same. So the broadening out's continuing. And I also think we got to expect a little bit of volatility here. One last thing that we did kind of see tick up last week, if we're looking at short-term volatility on the S&P index, so we use the oscillator for that, gives us a kind of an idea if the market's overbought or oversold. So if it gets over 5, it's really kind of overbought. And that's exactly what we saw. We saw a couple different times last week where it went over 6, over 5, ended, I think, down around 2.5 to almost 3. So would not be surprised to see any drama setting into this market geopolitically, maybe spooking it a little bit, getting some volatility this week.
Gotcha. Well, Graham, we always appreciate the information and expertise. And thank you to our listeners checking in with us every week. We did want to mention that we do have our retirement planning today classes, our first ones for the year, coming up starting next week on Tuesday. So 2 Tuesdays in a row and then 2 Saturdays in a row. So if you're interested in those, give us a call here at the office or check out our website. You can sign up for those there. And we look forward to seeing you next week.
Take care.